All right, hello everybody. How you doing? This is True Crypto 28 from Twitter, Mr. Anderson. Just want to say hi to everybody. I actually tried to put this video out a few days back, and I ran into some issues with some software, so I'm gonna try again. I did promise people some videos this week, or at least a video, and I want to make sure I do that. Instead of coming out with a straight teaching video, I just want to say hello, keep it a little more casual, talk about something a little bit different. There'll be some teaching in here, but ultimately, just more of an opinion piece, just to give everyone my view of where we're at in this bear market, what options we're looking at going forward, things of that nature. Say hello, introduce myself, etc. Ultimately, really quick, I know that these videos can go very long, so I'm going to try to keep it as short as possible. I'm sure I'm going to work through some issues with software and sound and things of that nature, so if you can bear with me, I appreciate that. They'll get better over time. Now, we're looking at two things. We're looking at the 2013 bear market. We're looking at the current day bear market. I'm doing this because I did put a post up recently where I talked about my opinion on how they are similar. Obviously, there's many ways that they're different. There's a lot of differences in the market. The market's more mature these days, and it's a different scenario that we're looking at altogether. We didn't have Mt. Gox, but there's also some other areas of today's market that didn't exist back then that might be more negative than positive. But what I talked about in this post, and I'll start fresh, is I call something what I call something is the hindsight line. I lost my train of thought there for a second, but what I like to do is I look back and I have a opinion of something that's called the hindsight line. And what that is ultimately is a line that you may not have seen crystal clearly at the time, but ended up being a line that mattered the most. And that particular level is right here in the previous bear market. And I'll show you why I say that. I've already drawn it. As I mentioned, I'm trying to save some time, but we ended up having a move where we went from previous all-time high in the level of $268 and eventually had a pullback of that balloon, and that bubble popped, ended up getting a new parabolic move. But within that parabolic move, this was the first all-time high. And within that all-time high, you started to see something a little bit different in that you had a breakout, a close above the all-time high, and you didn't get much pullback at all. And because of that, I've created this particular level along with what else we saw as my hindsight line. And I've also given it a range that ranges from the closing high through the wick itself. Now, support levels, they're much more of what you would look at as art as opposed to science, but these are also subjective, and people can have different opinions on it. But these are still my lines. As I mentioned, you're going to generally have zones of support versus specific one-offs or anything along those lines. So this is my zone, and here's what we look at. Basically, we had that breakout, and instead of having any market structure pullback at all, or even some sideways like you're seeing right here, we just continued on. And you had a gigantic parabolic move over a few weeks' time that went all the way up to $1,177 or in that general area. And then you had your Mt. Gox situation. And in dealing with Mt. Gox, you ended up coming back to this support area zone, my hindsight line that I've already told you about, and we bounced right from this level. You had a little bit of a bounce up to here. Actually, it was a significant bounce. It's from the 300s all the way up into the 700 range. But eventually that gave way. It was a lower high, and it gave way to a lower low structure thereafter. But in doing so, you again retested this particular area. In fact, you even retested the hindsight line, and you were able to fight it off and hold on. The next week, same scenario. You could see the wick right there. We had a little bit of a fight, and then eventually fought back again. Unfortunately, it ran into resistance. When you lost this particular area, that support became resistance, and it wasn't able to penetrate it, and you came back down yet again. But bulls were there. They fought it off for 1-2 different weeks yet again. You're talking about now 1, 2, 3, 4, 5 tests on a weekly basis. You actually got a pretty explosive move. You went all the way up near $500, but you could see it ended up being a shooting star on a weekly basis. Although this candle was green, you gave away the majority of that particular move. It fought a little bit, gets spinning top, and then eventually gives way. A little bit of a fight here, a little bit of a defense there, but ultimately you lost that particular level. And in my opinion, why this matters is that we went from the primary bull to a primary bear. But in this case, because we lost this particular level, I call this a secondary bear market. And a secondary bear market is one where you already suffered through one bear market, and it basically you reached a point where people were hoping that, all right, well, this is going to be the bottom or we're close. And instead, when you end up getting your capitulation, you drop through the line that mattered the most, but you didn't regain it. See, that's what happened here. This level means so much because it was tested so many different times. And by breaking it, you went through a process in which you went from your strong hands to your weaker hands to a level which I would call new hands. Because everyone basically gave up, right? They dumped, they gave up, and you end up getting new hands involved in this situation. And the new hands bought in this region, and they're happy to sell into resistance because that's what they should do. I mean, they had a little bit of a higher low to build on, and those new hands were happy to sell back into resistance again on this higher high. You had a very sharp pullback, and basically what you're looking at is 315 days of sideways type action. There were some nice moves in there, they were playable, etc., but ultimately, compared to where you were, this was disastrous to have to go through another secondary bear market. Eventually, you make your way through it, and you're off to the races. You could see this line still mattered, this area, even though you had a shooting star pattern again. Now, this time it ended up holding, just to give some more significance to the area that I'm calling the Hindsight Line. And then you bounced off of that, and you even bounced back off of this particular region that I drew as well. And ultimately, you had some proper market structure, which led you into this particular area over here. So that's the past. I'll show you, I'll leave that up on this side. Now we'll look at the present. Looking at the present, the reason why I see similarity is that we basically took off from there. You ended up having some good market structure on a weekly basis of higher highs and higher lows, higher highs and higher lows. And this is parabolic. It's getting sharper, but you're still seeing higher highs and higher lows. And you're still seeing multi-week pullbacks and things of that nature. Another higher high, another higher low. And this happens again, but it gets a little bit extra bullish in this area, and I'll kind of show you what I'm talking about. I completely understand if you want to say, hey, no, this is a higher low, look at that pullback. I get it. But I'm choosing this level right there, and I've already drawn it to save time, as my hindsight line. Why? Well, this particular candle was an all-time high, yet again, but it closed very high and very strong. So you had an all-time high breakout prior to what I would call the hyper parabolic move. And you didn't get the same market structure that you had been seeing for quite some time. And instead, what ends up happening is I've highlighted this particular region because this is actually around the monthly close. I'm not going to pull up the monthly, but trust me, it's right around that area. If I'm off by a little bit, I apologize. But that's why I've given it that range, because we see the bullishness immediately. Instead of pulling back and retesting these areas as we've seen over and over again with the market structure, instead we immediately pull back the next week. So you're thinking, okay, that's normal. But you end up getting a very bullish candle at the end of it. 2 weeks later, the next week, again, same scenario, very bullish candle. Huge breakout, something like $1,300 yet on top of this entire move. And things are really humming. So finally you get this move up, followed by a terrible bearish engulfing candle. So you're, again, I would assume, right? Most people are thinking, all right, well, we're going to pull back for a few weeks and then hopefully put in another higher low and build from there. But it didn't occur. The bullishness was so extreme that you turn this terrible bearish candle into an unbelievable bullish engulfing. This definitely crushed some bears. I mean, you had to. I mean, a bear had to be pretty happy with this move. Now, I don't particularly like this type of bearish engulfing candle and this type of structure, but that's for another lesson. Now, anyway, it still should have been good for a few weeks, or you would at least think at the worst case scenario, doji over here or something to create a morning star or something. But regardless, you immediately got this turnaround, which was unbelievably bullish. But very quickly with the line that I've chosen, that area was tested 1, 2, 3 different times within a matter of 4 weeks, and it held. And then hyperparabolic move close to 20,000. We break the parabolic curve. We sell off drastically. It's ugly. It's a terrible dump. And you come back down to the 6,000 level where we hold yet again in my green zone. We almost double from there. I mean, we're reliving it, so bear with me. But after doubling up, great move. You see this terrible bearish pullback. It happened fast. It was ugly. It was painful. And technically, we tested the area that I've highlighted here. If you say that's far too much, support, I understand that. I don't care if you call this an area of support or not, if it floated. But ultimately, you still had a bearish scenario where you made a lower low on a closing basis on the weekly and still ended up holding up in space, which is very impressive. You got another impressive move. Everyone's hoping that we're going to put in a higher low at some point. It didn't occur. We fall back. Yet another lower low. Oops, let me correct that. Yet another lower low right there. And yet again, this area is defended. When this happened yet again, we've seen an impressive move a few weeks ago, and it's being defended again. So ultimately, 1, 2, 3, 4, 5. If you don't want to count that, that's fine. 5, 6. Count that 7, 8. If you want to count these, you're up to 9, 10, 11, 12 different tests on a weekly basis. So somewhere between 7 and 12 tests on a weekly basis, depending on how you look at things. And that's a lot. Now, the problem is, of course, is that the more you test it, the more likely you are to break this particular zone. So ultimately, we could be facing a scenario where if we see yet another lower high, or really we don't even have to go for that, we could just turn down at some point, we might see that break come into fruition. And I'm not going to get into a prediction. The predictions don't matter to me too much. I don't think that matters because I look at things on a daily basis, and I'm looking at the highest probability. My idea in TA is let me choose the highest probability, and if I can do that more often than not, I'm going to be ahead of the game. But at the same time, I understand that my probability, success probability might be 70% based on the path that I chose. And if that's the case, that still leaves you 30% chance that it goes against you. So if it does go against me, then it might also change my perception of what's going to happen next. And this happens day in and day out, week in and week out, month in, month out, etc. So sure, I could say, hey, we're going to hit 4,700, and we're going to bounce from there. And I could sound like a genius. And if it's wrong, probably people won't remember anyway. So that's fine. I'm not going to get too much into that. Instead of that, I would like to talk about more what happens if we break the line, right? Let's talk about that, because if we hold the line, obviously we already know that's bullish. You're going to put in a higher low and things are good. But if we don't, you're going to break down at some point, whether that's today, next week, 2 weeks from now, whenever it is. I see this happening one of two ways. Both of them are a V-bottom scenario. In my opinion, I see us breaking through. I see us immediately pushing back up, because if we break down, what happens is the people that are pushing this down, they're only looking to create volume. They're looking to create a volume event, and they don't have a target. That's why I'm not going to have a target, because I know that they don't have a target. They're basically doing some stop loss hunting and seeing how low the thing will go until they can create that volume event. And when they do, great. Now they've created a scenario, and we'll find out where we go from there. Remember, we're not the smart money, so to assume that we know exactly what the smart money is thinking is inaccurate. Ultimately, whatever their plan is, good for them. But ultimately, two things happen. One, the bullish scenario is we bounce back, V-bottom within the same week. We want to have a closing candle. It can wick down here, but it needs to close back above this hindsight line. If it does, and you get that, obviously this isn't to scale, but if you get it within the same week where it closes back above it, then great. This support held in that scenario. And in fact, in my opinion, it becomes strengthened. I think people are going to see that as a sign of strength. I'm very confident that if that does occur, we will in fact go ahead and put in a higher low and create a scenario to where we could start to build from there. That's how I would see it. But the other alternative is this. Instead of that V-bottom scenario where you go ahead and bounce back above my hindsight line, we may have a V-bottom scenario where instead we back up to what is now significant resistance that was tested 7 to 12 times on a weekly scale and now is broken down. And we could end up in a same situation where strong hands went to weak hands. We thought maybe they were strong hands, but instead they ended up becoming new hands because everyone dumps. So if that occurs, same scenario. You create the BART pattern, right? Everyone knows the BART pattern, where you're basically just sitting here in a zone where unfortunately you go into a secondary bear market just like this. I don't want to see it. Nobody does, but we have to face the reality of what's ahead of us. And ultimately, that's something we could see. That's my view of things. I'm not going to go too much deeper. As I mentioned, I just wanted to break down the tweet that I had put out last week in a little more detail because I had a lot of questions on it. I'm happy to get a video out finally. So I have a lot of plans. I won't go too deep into them. I've been working on a lot of big things, and I'm pretty excited about what's coming. I actually figured out some ways that I think can really help people. So we'll talk more about that as we go on. I have some different ideas for videos as well. If you could do me a favor, support this, push it out there, retweet any links that I might put out to other people. Thumbs up if you can. And I'm going to look forward to trying to assist as many people as possible, discussing some different things and growing the community. We'll talk to you soon. Thank you.